Crypto Taxes Explained, Beginner Guide UK 2025. If you've ever wondered, do I have to pay tax on my crypto in the UK? The answer is yes. In 2025, Her Majesty's Revenue and Customs, HMRC, treats crypto as property, not currency. That means it's subject to capital gains tax, income tax, and reporting requirements. The good news? You don't need to be an accountant to understand it. You just need the basics and a plan. In this guide, we'll walk you through how crypto taxes work in the UK, what counts as a taxable event, how to calculate your gains, and how to stay compliant without losing your mind. Before we begin, a quick but important reminder. Crypto assets are high risk and not regulated in the UK. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research. Now, let's break it down. In the eyes of HMRC, crypto is not money, it's an asset. That means it's taxed more like stocks or real estate than pounds in your bank account. If you buy, sell, swap, gift, or even spend your crypto, you might trigger a tax. The amount you pay depends on how much you gained, how long you held it, and your personal income level. Let's start with capital gains tax, the most common one. Every time you sell crypto for fiat, like converting Bitcoin to GBP, you create a disposal. That disposal can trigger a gain or a loss. The gain is calculated by subtracting what you originally paid, the cost basis, from what you received when you sold. If you made a profit, that's a capital gain. If you lost money, it's a capital loss, and that can reduce your overall tax bill. But here's where it gets tricky. Swapping one crypto for another, like trading Ethereum for Solana, also counts as a disposal. So does spending crypto to buy goods or services. Even gifting crypto to someone other than your spouse can be taxable. HMRC considers any action that changes ownership as a potential tax event. You get a capital gains tax allowance each year. For the 2025 to 26 tax year, it's £3,000. If your total gains for the year are below that threshold, you won't owe any tax. But if you go over, the excess is taxed. Basic rate taxpayers pay 10% on crypto gains. Higher rate taxpayers pay 20%. Losses can be used to offset gains, so always keep track of losing trades too. Now let's talk about income tax, the other side of the equation. If you earn crypto through work, mining, staking rewards, airdrops, or play-to-earn games, that may count as income. In that case, HMRC wants to know the value in pounds at the time you received it. You pay income tax based on your normal income bracket, and you may also owe national insurance in some cases. Later, when you sell that crypto, you might also owe capital gains tax if it appreciated in value. Yes, sometimes you get taxed twice. Once when you earn it, once when you sell it. So how do you track all this? You'll need to keep detailed records of every crypto transaction, when you bought, sold, swapped, received, or spent. Each entry should include date of transaction, amount of crypto, value in GBP at time of transaction, transaction fees, wallet or exchange involved. If that sounds like a lot, it is. But the right tools can help. Crypto tax software like Coinly, CoinTracker, Accounting, or Recap UK can automatically sync with your wallets and exchanges to track everything. These tools calculate your capital gains, income, and losses, and generate HMRC reports. Some even help you file directly with HMRC. If you trade frequently or use multiple platforms, tax software is almost essential. What about wallets and DeFi? HMRC expects you to report gains even if they happen inside wallets or dApps, not just on exchanges. So staking rewards, liquidity pool payouts, and yield farming income can all be taxable. Make sure the tool you use supports DeFi transactions and NFT marketplaces too, as these are often missed. Speaking of NFTs, yes, they can be taxed too. Selling an NFT for crypto, swapping one NFT for another, or even minting and selling your own art can all create taxable events. In most cases, it's capital gains. But if you're selling NFTs regularly as a business, it may count as income. When in doubt, get advice from a crypto-savvy accountant. Let's go over how to actually report your crypto to HMRC. You report capital gains on your self-assessment tax return using the Capital Gains Summary SA 108 form. You'll need to declare total disposals, total gains, total allowable losses, net gain for the year. If your total crypto disposals exceed £50,000, even if you had no gain, you're still required to report. You also report crypto income, like staking or airdrops, on the self-assessment's main income section. Keep a record of how you received it, when, and how much it was worth in GBP at the time. If you earned crypto through work or freelancing, it may go under self-employment or other income, depending on how it was paid. Now let's talk about losses, because they can actually help you. If you sold crypto at a loss, you can use that to reduce your total capital gains. This is called loss relief. Even if you didn't sell this year, you can claim past losses from previous years, going back up to 4 years. Just make sure to report them properly so HMRC has a record. And if you've had coins stolen or lost access to a wallet, HMRC may let you claim a negligible value election, meaning you write them off as worthless. This won't give you a refund, but it might reduce your overall tax bill by recording a capital loss. The process can be complex, so it's best to consult an accountant or tax advisor. Let's clear up some common myths. No one's checking. Actually, HMRC has started working with crypto exchanges and is receiving data. They know more than people think. Just keep it all on-chain and you're safe. Not true. Blockchain is public. Once tied to your identity, everything is traceable. Only big trades matter. Wrong again. Even small disposals or rewards can be taxable. It's not about how much you trade, it's about keeping clean records and reporting honestly. What happens if you don't report? You could face penalties, including interest on unpaid tax, late filing fees, or investigations. HMRC offers reduced penalties for honest mistakes, but harsher ones for deliberate evasion. If you've made past mistakes, you can submit a voluntary disclosure to correct your records. To stay safe, follow these best practices. Use tax software. Keep all receipts and export your exchange history each tax year. Don't mix personal and business wallets unless you're confident in your records. And if you're unsure, work with a tax advisor who understands crypto. Crypto taxes in the UK aren't simple, but they're manageable. You don't need to be perfect. You just need to be proactive, honest, and organized. With the right habits and tools, you can keep your crypto profits and your peace of mind. Thanks for watching CryptoPulse. If this helped simplify crypto taxes, give it a like, share it with your fellow investors, and subscribe for more easy-to-understand crypto explainers. We simplify crypto, so you can invest with confidence.